Hey everybody, this is your host Jay Croom, and I'm back with another episode of Plug. This is episode 4, very special episode for me. I got somebody from my hometown, somebody with the same background. We got JT on the show today, and we're going to be
Yo,
giving you everything you need to know about life insurance. So JT,
absolutely.
welcome to Plug. Thank you for coming on the show. And run us your credentials, run us down with your backstory. How did you end up in life insurance? He's also an entrepreneur. Like, give us the whole thing.
Yeah, absolutely. It's a pleasure to be here. Shout out to everybody. Shout out to Jay for the opportunity. So just the beginning, right? First and foremost, y'all like popping my cherry. This is my first podcast, right?
Oh, great, great, great.
So this is the first podcast, like first of many. I'm excited personally. You know what I'm
Hey,
saying? So
many more to come. Many more to
yeah. Many more to come. So like when we look back on this, when I blew up to it, right? When we both blow up to
come.
it, right?
Exactly,
We
exactly.
can,
You
we gonna
walk
have this.
me on your journey, and when we look back, we'll be like, man, we have to do another episode.
Absolutely. So yeah, I go by JT. My real name is Jonathan Tarver. I'm from East Chicago, Indiana, born and raised in,
Hey,
right?
man, crazy now.
Absolutely. So, yeah, born and raised in Indiana, graduated from EC Central. That's where Jay and we connected. And quick backstory, right? I'm gonna hit it real quick right now, out the gate. We both end up going to the same church, right? Which
Yep.
is a little bit ironic. So that may seem like a normal thing, right? But what makes it unique is that like we both lived and went to school in Indiana, but our church was probably like a good hour away from like
Illinois.
yeah, in Illinois, right? So the rarity of finding somebody from your high school,
Yeah.
you end up seeing them, at church. Like we was like in the hallway, and I
Right,
seen
like, looking like, hey,
I was like what you doing here? You know what I'm saying? So like that was always kind of like a cool
parents
little
knew each
bond.
other. It was just crazy. Yeah.
Parents knew each other, everything, right? So yeah, so as I mentioned, it's about my background, right? Born and raised in Indiana, went to school at Indiana University. I graduated. My degree was in public management, but just like many of us out there probably listening, I didn't end up working or getting a job into what my degree or my specialty field was, right?
Mm-hmm.
So since graduation, I have had I've got over 12 years of coaching and sales and leadership experience from across multiple industries, right? So whether it's the pharmaceutical sales industry, consumer packaged goods, insurance, even right now financial services. So I've had my hand in a little bit of everything, but today we're going to be talking a little bit about the most recent endeavor, right? Or the most recent adventure, which is life insurance. So that's just a little bit about me, Jay.
Okay. All right. Thank you for sharing that. So we just gonna hop right into it.
Yeah.
This is a very special episode for me, just because I feel like we all need this knowledge. This is something that everybody needs. This is not for a particular group. This is something everybody needs. And I think that sometimes we're not um, as educated as we should be, because for one, I hate to see the GoFundMe's go up.
Yo,
Or I hate to see somebody pass and there's so many bills, or there's so many things that other people get left with, and you're already grieving, and
right.
so you want to have everything in place. And I think it's just a scary topic, so I want to make it less scary today and just get that information. And normally, and with working in the with finances and things of that sort, once you get the information and you start doing what you need to do, money becomes less scary. So I'm hoping to do that with life insurance today for
Absolutely.
everybody else. So I definitely appreciate you. So for the first question is, what is the difference between term and whole life insurance?
Absolutely. Good question. And this is like the $1 million question, right? Everybody asks, you see things, brochures, things on TV commercials, but nobody really truly knows what it is, right? So let's pull the mask off, right? About insurance as a whole. So term versus whole life, right? So term is pretty straightforward. Just think of it as how its name, right? For a term, a specific period of time.
Yeah.
Typically, you can get term insurance in different increments of 5, 10, 20 years. Most companies do up to 30 years, right?
Mm-hmm.
And you can have term insurance. And term will cover you for that specific period of time. right? Now, whole life insurance or permanent insurance is which is what it's also called, right? Permanent life insurance covers you essentially for your entire life or up to age 100 or 120, depending on which company or organization you may get a policy through, right? Also, permanent insurances have this one aspect or one benefit that a lot of people like to take advantage of, which is called cash savings or a cash value account, which are part of your premiums that you pay every month. Goes into build a savings account that you can have access to with a couple of stipulations, but it does build a savings for you if you do have that type of insurance.
Okay.
So yeah, those are the basic two differences. So term, it's going to cover you for a period of time, that 10, 20, 30 years. And then the permanent insurance is going to cover you for up until age 100 or 120, right?
Okay.
For your entire life.
Great. Definitely some great information.
Yeah.
So that should, just with defining those, that should probably help some people figure out what's best for them. So let's move right into that. Well then, who should be buying term, and then who should be buying whole? Or is one just always better than the other? Um, what are your thoughts on that?
Yeah. So in my professional opinion, right, and you're going to have other people who are going to, give you a different experience or depending on where you are, what situation that you may be in.
Mhm.
I gravitate towards term insurance, right? A couple reasons why I gravitate towards term. One, it is more affordable, right? That's fact. One thing about term insurance, so yeah, the affordability aspect of it, and you typically can get more coverage for that dollar amount. So
Mm.
for example, if I wanted to get a term insurance policy for, let's say, 100,000, right? I'm just throwing out some numbers out there. It may cost $20 a month, right? But if I wanted to get 100,000 for whole life, right, it may cost me $75, $100 a month, right? Something to that effect, right? So there's a significant price difference in the cost of term versus whole life, right? So just a couple scenarios, right? I'll throw a couple things out there. Um, Also too, depending on who you may let's see, if you're into financial gurus, right? You may have heard of Dave Ramsey or
Most
Susie
definitely.
Orman, people of that nature. They are a part of that school of thought of buy term insurance and invest the difference, right? So what exactly does that
What does
mean,
that
right?
mean? Right, right.
Right, yeah, what exactly does that mean? So as I mentioned to you, so there is a price gap between term insurance and whole life insurance, right? So, for example, if you got that term policy for $20, right, instead of that whole life policy for $100, right, you would take the $80, right? It's a difference of $80, 20 for the term, right? 100 for the whole life. You would take the $80, which is the difference, and you would invest that into a mutual fund, right? Or
Right.
some type of money market, right? So that way it's compounding interest, building money over time to the point to whereas, let's say, when that term runs out, okay, not only were you covered for the 30-year period with the term insurance, but now you have a nest egg, right? You have some accumulated wealth, right? That can essentially replace your insurance, right? So
Mhm.
essentially, you don't need the insurance anymore because you have a nest egg now that you can pass down to your family, right? And you were able to do that, right, by buying a term policy and then investing the difference.
Okay, so that's, yeah, so that does move us towards that generational wealth then.
Right.
Um, so I've never, and even though I do, I'm very familiar with Dave Ramsey. Like I have his books and things of that
Hmm.
sort. And, the snowball effect, and
Yeah.
paying off debt.
Debt
Very
stacking. Hmm.
conscious of that. So in the works of doing that with some of my debt and things. But wow, okay, so that's a whole new school of thought for me, though,
Hmm.
as far as having the term and then investing the difference, because I do invest, so I do the
Okay.
stock market and everything, and I'm currently building my own 401k through there that way.
Awesome.
But didn't think to do, replace my life insurance. That's another thing I didn't think. So thank you for bringing that
Yeah.
out.
A
That
strategy.
right there, that's, yes. So you definitely
Mhm.
have to have multiple strategies. Wow.
Yeah.
Okay.
Yeah.
Thank you.
Yeah.
Um, and so next, I wanted to ask, what guidelines should people follow who are looking to purchase life insurance? Because like you were talking about, everybody's in different budgets, different backgrounds. So what kind of guidelines should they be following?
Yeah, absolutely. So I think you want to merge two, I guess, schools of thought, right? Or two ideals in the sweet spot, right? So you have what you can afford, right? And then what you actually need.
Yeah,
Okay. So depending on who you speak with or who you're working with, they're going to tell you, oh, well, you're going to need 10 to 20 times your income, right? So you could write that out and see what that will net out for you, right?
right.
That's one rule of thumb.
Okay.
But what me, myself, my team, what we like to do is we do what is called a dime. Okay. It's an acronym, right? So the D stands for debt and or death, right? So all the debts that you have, right? And of course, when you die, right? What would it cost to replace or take care of all of your debts, right?
Mhm.
So that way that burden doesn't fall on the shoulders of your loved ones, right? Um, we look at your income, how much money were you making while you were here, right? So if we have to, God forbid, something were to happen to someone and they were young, you still have children, you still have other things to pay for. We need to make sure we have an adequate amount to, replace your income for this period of time, right?
Right.
And then, the M stands for mortgage, right? If you bought a home, how much is left on your mortgage? God forbid something would happen. We need to have enough funds so that way we won't lose our home. We can still support and have some type of standard of living in your absence, right?
Yeah.
And then the E stands for education, right?
Right.
You got children. You're thinking about setting them up for their future. What would college cost at least that first year, or semester, whatever you can put aside for the educational part? You also want to have that figured into the amount of life insurance that you need as well.
Wow, I
Mm.
really like that dime and how you laid it out, because
Yeah.
normally, at least what my thought was, oh, I need enough. I think we focus on just taking care of the burial, or,
Right.
you know, um, if you want to be cremated, like you just thinking, oh, I need life insurance just to take care of me. But
Right.
reality is that you really do need the amount of money for your family and who you're leaving behind as well,
Absolutely.
because again, like I mentioned, a lot of people go into debt because they can't bury their loved, or they try to go into debt burying their loved ones, or then you have to turn over to GoFundMe, and it just,
Absolutely.
it just, and then what are you leaving your children? What are you leaving, your spouse, your partner, whoever,
Yeah.
what it just becomes I think it becomes a generational repeat at that point, and not generational wealth.
Absolutely. And
Yeah,
that's key. That's key what you said. And even just speaking to just kind of what got me passionate about, doing this and getting involved and sharing the information. Like even just this past month. So September is Life Insurance Awareness Month, right? So I've
okay.
made a couple posts on social media trying to just,
I caught you
flat
right
out.
in time then.
Yeah, absolutely. Just trying to, educate people, right? I'm
Yeah,
like, hey, look, I don't even want you to buy nothing from me, yo. Like, let's just talk about what you have. If you have something that's sufficient in place that meets the needs of your family,
yeah.
right? And just get you educated, right? Like this month alone, and I've seen so many times on my timeline, rest in peace, so and so, or
Hmm.
this or that happened, and
Especially with COVID going on.
yeah, especially with COVID going on, and even like, look, like death is no respecter of person. It doesn't care
Yeah.
how young you are. You don't know. Like even with Chadwick with Boseman, right? Young actor, 42, 43 years old, right?
Rest
And
peacefully and empowered. But yeah, you just don't know. You don't.
yeah, yeah.
So
So it's important to have something in place, especially something in place outside of your job. So
yeah. And I
yeah,
think that it's scarier to not have something in place. I think people have to start focusing on the death part and start focusing on the after you're gone. Who are you leaving behind?
yeah,
How much do you love your people that are here?
yeah,
Because do you really want them to be trying to grieve and be burdened at the same time? And so if we just remove that stigma away from that, this is talking about death, and let's talk about life. What
right,
about the life that your children need to live after you? What about the life, that others need to live after you? And so I think once we start making it about life and generational wealth, then
yeah,
people will start receiving the information a bit better, and it's not so, because it's
true.
inevitable. Like you said, it's
Yeah.
about, it's going to happen. So we can't sit here and act like it's not.
Absolutely. And you brought me to another point.
Mhm.
I just wanted to share this as well, right? I kind of want to dispel the myth of, okay, um, life insurance is not only for when you die or after death, right?
Right.
So, for example, there are policies, right, that you can get that have what they call living benefits, right? So, one of the living benefits that people can have access to, um, God forbid something were to happen, you became critically sick, critically ill.
Mhm.
There are clauses in life insurance policies that allow you to take a portion of that death benefit, right, and
Mhm.
apply it to bills and other expenses to help
Okay.
you deal with your critical illness, right? So if someone develops a cancer or something of that nature, uh, those treatments, right? Those medications, those things are very expensive, and sometimes having basic health insurance, that's a whole nother topic, right?
Oh,
But
man, that is.
yeah, that's a whole nother topic. But you could use your life insurance to act as a float, a raft, a safety net while you're living to help cover some of those expenses that you may incur. So that right there, you just brought that out of me. Like
Thank
it
you
does
for that.
have
Yeah, thank you for that because that's knowledge that I didn't have.
yeah.
And I'm looking forward, of course, to talking to you afterwards. Because JT's definitely gonna quote me. Because I definitely want to work with my man here.
Yeah,
But yeah. So again, transforming life insurance from death to life, and I
yeah,
think it's really just got to be the thought now that it's about living. Um,
absolutely.
yeah. And then, so I just got one more question for you. And how can life insurance be a tool used to build generational wealth? Like we talked about some things already about, the life benefits and everything, but I really want to get into um, how can your policy be used as generational wealth? Um, and then what are the best practices for a payee? And then on the side of the beneficiary, what needs to be done? So on both sides, what can be done, um, or what needs to be done as well?
Yeah, yeah, absolutely. So in terms of generational wealth, I think the first thing, have a plan, right? Um, you shouldn't die with anything, with nothing. I'll say that. Having a plan, having a policy in place, whether you are doing whether you're buying term and investing the difference, or you decided to go the route to get whole life policy, you have to have something in place. You got to have a plan in place, and that's the first way that you pass on generational wealth is having a plan. You thinking about the future. You thinking about the generations after you. Having a policy in place, having a plan in place. That's the first way you do that, right? First and foremost. Then now this is something key, right? You talked about beneficiaries. Okay, it is important. So one thing I'll say this now: um, if you currently have a policy right now, and you have your children listed as a beneficiary, and they are a minor,
Mhm.
right? I recommend right now you finding someone who's not a minor and establishing them as the beneficiary, because it creates a whole lot of red tape and rigmarole when it comes to paying out the death benefit, right?
Right.
When you have a minor, okay, as your initial beneficiary, right? So you want to make sure that your beneficiaries are first and foremost updated. If you did try to put a child down as a minor, now they will need a guardian to oversee them before they could actually get that death benefit, right? That's something that people may be aware or may not be aware of, but you want to make sure that you have your beneficiaries updated, and you do want to have a guardian in place if you do have a desire for your children who are minors to receive your death benefit. Um, what else? In terms of best practices, I think I always recommend people, update and review your policy after every couple years or a life event. Let's say you do have children, relationship situation may change. You may have purchased a home or a house,
Mhm.
something of that nature. You always want to update your policy to reflect those changes, whether you need more or less insurance, whether you need to switch out or change a beneficiary. There was a situation with the family where a husband was divorced, had a new wife, children, family, whatever the case may be. COVID got a hold, happened, caused him to no longer be here. But his beneficiaries were situated, geared toward his previous wife
Wow.
instead of his current wife, right? So
And
it is so important to
hope you stay on top of that.
you
That's
got to stay on
about
top
life,
of that.
reflecting the life that you live. That's life insurance. That's what we, yeah. Wow. I'm sorry to hear
Absolutely.
that, because things do
Yeah.
change. And I think that
Absolutely.
there's another thing, just because life changes doesn't mean that it's necessarily a bad thing, so
Right.
just make sure that it reflects that. Because otherwise it can end up, again, bad for the people that you are living your life with. Wow.
Yeah.
I'm sorry to hear that.
Yeah.
Yeah, so
Yeah.
it's important. I'm glad you brought that up though, because I know that might be certain situations for certain people where they need to
Hmm.
update beneficiaries and things of that sort. Yeah.
Yeah.
Wow.
Yeah.
Okay.
Absolutely. But yeah, that's basically kind of, all that I've got in the moment. So just kind of recapping,
Mhm.
going down the list. First and foremost, guys, get something, right? Get something outside of your job. Um, you want to get something that you can afford, because you want to keep it in place. You don't want to have anything lapsing or anything of that nature.
Yeah.
Also too, whether whether you're a term or a whole life person, I personally recommend term, right? And that you should be investing the difference. Don't fall into the trap of just, oh, well, I just got term, that's it.
Yeah.
You need to invest with that as well, right? I think that's the one key component that will truly save you. You got to be investing something with that as well. um, Beneficiaries, right? Make sure they're updated. If you have children who are minors, you need a guardian to assign to them first, right? Get somebody you can trust, who you believe will carry out your best wishes, right?
Yeah.
You want to make sure you have that in place. And yeah, guys, it's this is what um, other cultures have been doing historically for years,
And
right?
yes,
You,
there's
you know,
we're kind of behind a little bit.
we're kind of behind, right? We wonder, we're looking, oh, well, how is, so and so being able to do this, or these folks are doing that, or this stuff is going on in their communities. We've been dying for free for too long.
We have
Like, you
indeed.
know,
I agree.
so yeah, it's really about putting something in place for the next generation. And one last thing here, I know there's a lot of stuff going on in our community, right?
Yeah.
Across the world. I turn on the TV, I see different verdicts and rulings. I see the protests, I see the murders and things of that nature happening in the street. And another thing that's kind of been like my crusade uh, is this whole just economic empowerment, right? And just having financial education, right? I know we're talking about life insurance, but this is a part of that whole grand scheme of formula, right? Of how people are establishing, creating, wealth within their community.
Plan that you said you gotta have. Yeah.
So absolutely. So I just leave y'all with that. And yeah, Jay. I
Oh
think,
man, JT, thank you so much. I learned quite a bit because I knew, a few things. But you definitely have opened my eyes as well. I got some things that I need to do and make sure that I get on top of, and making sure that I'm investing the difference.
yeah,
That was
absolutely.
a key thing for me, is making sure that if you get term,
Yeah,
invest the difference. And
got
if
to.
you don't feel comfortable investing, then you should probably just go ahead and go with the whole life. That's what I
That's you.
got from
Hmm.
that.
Absolutely.
And then also, like you said, just making sure with minors, that the guardians are in place, because there is a lot of legal stuff with that for them being
Yeah.
minors and things of
Mhm.
that sort. So you think that you left your children something, and then they're having to jump through red tape. And if they're minors, they don't even understand the red tape. So I think
Right.
there's another important piece, is that you also educate your children as well.
Absolutely.
Because I think a lot of the times, like my grandparents, they set up a lot of things, and I kind of came later in the situation, and
Hmm.
so I didn't get to sit and talk about certain things with my grandfather.
Yeah.
And I just felt like back then you just did stuff, but there was
Hmm.
not an education piece to it.
Right.
And I think that's the bridging the gap there, is to make sure that we get the information, so that way not only do you get the money, but you know what to do with it when you get it, and
Yeah.
what needs to be done. And so take that money, go get you a policy, and do the same thing, and set up your plan the same way.
Absolutely.
It's great. You said Dave Ramsey. Who's the other person? I just wanted to.
Susie Orman.
Susie Orman.
Hmm.
Okay, and then I'm gonna throw Jeremiah Reed out there.
Oh, absolutely.
Yes,
Yeah, the homie,
book.
Vincent.
Yes,
Oh, you know what?
I
Wait a
got
minute.
the book. I got
Wait
the
a minute.
book. You're gonna make me
Let
get
me
up. There you go. I
let
got
me
my book too.
I had it.
You're
Yeah.
gonna make me go get it, but I'm not gonna get up in the middle of. But like, I
Yeah.
do have the book. I was able to read the first few chapters. Definitely shout out to Jeremiah Reed.
Shout
That's
out.
the homie.
Yeah,
That's my classmate.
Yeah,
And so he was also my valedictorian. But
okay.
I'm definitely proud of him, and hopefully I can get him on soon too. But so those definitely some resources for people. Anything else you want to add?
Yeah, I just just thanks for the opportunity. I appreciate coming and speaking to the people and sharing your audience. I wish you much success. I hope this thing really takes off as you continue to educate and empower people in our community and even beyond our community, right? Like the world, like we ain't gonna put no limits on this.
No, we're not
This
gonna.
is big, right?
We're gonna manifest bigger
Big.
and better. Yeah.
Yeah,
I speak the same
absolutely.
for you, man. I see what you're doing. I see your heart is in the right place. I really, really thank you from the bottom of my heart for coming on the show today and just sharing. Because that's you could have charged for this. You know what I mean? This is knowledge that you can charge for. So anytime that somebody lends their resources and their knowledge and information, and they just want to have the heart to put it out to the people, I applaud that, and I'm grateful and appreciative of it. And so I know you're going to go far. Like you said, we're going to look back a year from now. We got to come back on, do an update episode, and we both going to be, we didn't reach our goals. And like you said, let's make this a global thing, man. Let's two people from EC, and let's change the world.
Absolutely. I'm with you.
All right. Well, I'm your host, Jay Croom, and this is JT. And this was the 4th episode of Plugged. We're going to sign out. I'm Jay Croom, and thank you so much for tuning into our show, Plugged. Like, comment, subscribe, and hit that share button. Until next time, peace and blessings.